A dire warning was just issued. That's right, another dire warning. I'm going to tell you the latest warning about the economy. Hey, everybody, you're watching Bull Boom Bear Bust, back with another dose. BX4 News, Bolt to the Bus back in the building. Let's go ahead and get right into it, folks. The economy, it's looking good when you look at the stock market, right? We know that the stock market is not the economy. When you look at the working class, the middle class people, the 70% of the people down, top 30% doing pretty good, especially the top 10% that owns most of the stock market. But 70% down, not doing so good as far as wealth. Now, people may look like they're doing good. A lot of new cars on the road. Borrowed money, basically. Most of the people in newer cars borrowed money. And nothing wrong with that. I mean, when prices are so high, you're pretty much forced to borrow money to make a big purchase, unless you're in the top, 10, 20, maybe even top 30%. But actually, I know people making $200,000 a year here in California that had to go out and get a big mortgage. Even $200,000 earners are not just going out and buying cash for a house, because you make $200,000, you're probably going to be spending a lot more than that based on where you live, right? Because California is a high income state, but it's also a high cost state. Most of you know that. But let's go ahead and get into the news here. A lot of stuff to cover. And think about this. The stock market making new all-time highs, different indices. Every couple weeks we see a new all-time high. We recently saw it in the S&P 500. But the consumer now very, very under financial stress. And what we see here is the most people of all time not paying off their credit cards in full each month. More than ever, more than the financial crisis. I have to keep coming back to that, because that's, I think, by itself, a very good, kind of in a nutshell, example of what's going on. More people than ever right now not paying off their monthly cards, monthly balances in full on their credit cards. And this is one of the most dangerous times for this to happen. We've never seen interest rates on credit cards this high. So where does this end up? It looks like everything is going to be coming down here very soon. And some people say, well, you've been saying that for a while. Well, things are coming down. Just look at what's happening. The debt continues to explode higher. We're seeing data and examples like the one I just mentioned about the all-time high credit cards. So things are happening. You just have to look at the news, look at the data. Look at yourself and people around you. Are people doing better now, or are they doing worse than just 1 year ago? All right. And there's a lot of hope, a lot of optimism with the new administration. But we're going to get into some news here that's saying that I think reveals that the new administration is in for some big, big trouble. And they even admit it, right? They even admit it. We're going to stay tuned for that. We're going to talk about that here in just a couple minutes as well. All right, but let's talk about this first here. De-dollarization. We all should know, all of us, probably most of you know about the BRICS nations and their de-dollarization efforts. Well, some of those nations backtracked. We saw Brazil recently talk about that they're going to be going back to the dollar. Now, a lot of this was the threat of tariffs, but economists are out there warning that the tariffs are going to be more incentive to de-dollarize. And basically they're saying that, yeah, Brazil's saying that to try to appease the powers that be, but in the background, they're going to try harder than ever to de-dollarize, because when you get threats like this, threats of tariffs, and then the tariffs that'll eventually end up happening, that's more incentive to de-dollarize, because you don't want to, as a country, you don't want to be threatened by another country saying all your exports are going to have to pay a huge, huge tariff. And it was up to 100% tariffs that were threatening against some of these countries that export a lot of goods and products to the United States. So will this lead to more de-dollarization, or will the threat of tariffs work and these countries are going to basically fall in line and the companies are going to bring back jobs, right? So we'll see how it plays out, and we'll see how quickly it plays out. To me, bringing back jobs and manufacturing to the U.S. is a very long, long process. And again, we'll see how it plays out. I could be wrong. These could be the saving measures to make everything, I guess, wonderful again. I mean, if you want to talk about the 70% living paycheck to paycheck, maybe it'll be 30% living paycheck to paycheck in 1 or 2 years. I doubt it. I really doubt it. Please let me know what you think down in the comments. Will the tariffs backfire, or is that going to lead to better days ahead for most people. And again, I've done pretty well in the markets, especially last year. Last year was a banger of a year with some of the assets here. And I've talked about them all right on this channel. All of you know exactly what I invested in. And last year was a banger of a year, had a great year. But I've said this before, I try not to look at just how I'm doing because I'm an investor. I'm looking at this stuff every day. And not even a full-time investor, just part-time, able to do pretty good in these markets. Different assets, when they drop down lower, you buy them. Sometimes you have to hold them for a while, then they go back up. I just saw like a 600% increase in some of my investments at the end of last year, sold some of those off. And it's crazy. But the reason I report the type of news I report is because most people aren't investing like this. Most people, like the 70% that we always read about, living paycheck to paycheck, they're barely scraping by. They're living on borrowed money, right? And there's times I needed to borrow money. In fact, if it wasn't for borrowed money, I could have not got into the real estate market back in 2010 when I got into real estate for the first time in California. And, you know, nothing wrong with borrowed money, but borrow money at the right time is one of the keys to being successful, right? I even know people who borrowed money to get into the stock market when the markets crashed in 2009, and some of them did well. I know one guy in particular who took out a huge home equity line of credit, even though his home value had dropped at that time. He took out a home equity line of credit. He still had really good credit. He was able to borrow money, put it all in the stock market. He more than like doubled his money in just a few years. Ended up paying that back, plus had a whole bunch left over on the side. And he has a home in California, so it was a lot of money that he was able to borrow, basically, and then put into the stock market. And I'm not saying that this is a great idea because it worked for him, but it may not work for everybody, especially if you do it at the wrong time. But anyways, let's go ahead and move on here. Some other news I want to get into today. And let's talk about the student loan debt forgiveness deal. Business Insider had a recent article about this. And it's pretty interesting because a lot of the people that have the student loan debt, they were expecting the loan to get forgiven a long time ago. In fact, many of them banked on it. And instead of saving money to pay off their debt or to resume their payments, which ended up happening, because remember, payments got frozen for, I think, over 2 years after the health crisis. Instead of saving money, many of them banked on just the debt being erased because there was so much talk out there about the debt being erased. Some people did get their debt erased, but now with the new administration, they're very worried that they won't get the debt erased. Even though most people didn't get the debt erased in the previous administration, they're more worried now. But as a leader, as a president, if you wanted the economy to look good, you would want to forgive debt, because what happens when you forgive debt? People have more credit available because they have less debt, and they have more money available to go out and spend it. And we know that the gauge of a good economy is spending. Unfortunately, that is the gauge. That is reality. So if, as a leader, if you want the economy to look good under your watch, you should want debt forgiveness. The problem is debt forgiveness has some drawbacks, right? One, you have very angry people. The people that paid off their debt, they're mad, they're pissed off that these other people got basically a free ride. But that's one way you could actually make the economy look good. There's a balance there, though, because if you make the economy look good, but you have everybody mad at you that paid off their debt because they didn't get the debt forgiveness, then it's more of a lose situation. So it's not as simple as just, okay, let's just erase debt and make the economy look good. So there's a whole bunch of factors and different metrics and stuff behind it. Now, if I was someone that worked to pay off a loan and I saw a bunch of other people get their loan paid off for free, or just get the debt erased, I would be very angry, right? I didn't go into debt to get a college degree. I actually had my employer pay for it because they had this program, like this student, I forget the official name of it. Basically, they paid for your college as long as you were pursuing your degree, and if you were sent them the transcripts and all the stuff there, they would reimburse you for the expenses. So it's pretty cool. But if I did have to go in debt for college, yeah, I would be upset seeing that someone else didn't pay off their loan and just got it paid off when I had worked hard to pay off the debt if I was in college loan debt. All right, folks, here's where the rubber meets the road. Basically, the powers that be, the current administration, admitting that they need help to make the economy look good. Let's go ahead and bring this up right here. Current president says he'll demand lower rates immediately. right? If all his ideas were so good and he has the fixes, he has the remedies for the problems, why do we need lower rates? Right? Lower rates is what got us into this mess. Easy money is what got most people into the mess they're in today. The cost of living out of reach. People striking all over the place. We have Costco workers now threatening to strike because people's incomes, their wages, is not keeping up with the cost of living. And if you had the solutions, why would you demand lower rates? Or again, so this, to me, it looks like inflationary measures here. More lower rates, right? And you may help the people with the credit card debt that have 20+% interest on their credit card. You may help them stay on top of the ice for now instead of the ice breaking and then falling into the water. You may help them stay on top of the ice for now. But lower rates is not a solution, folks. It's a way to, again, kick the can down the road. But another 4 years of this, of lower rates and people sustaining this debt for another 4 years, even with lower rates, to me, it's looked like a long shot. But just the fact that they want lower rates should be an eye opener to a lot of people that think that, everything's going to be wonderful, everything's going to get better. And, some people I see down in comments, I see your comments, right? And I see your reactions and you say, well, everything's fine. You're over exaggerating. Great. I hope it is fine. Maybe you're in the top 30%. But again, I'm not talking about investors, people that have no expenses, right? There are people out there with very little overhead, right? People with their homes paid off, people without any families, people are childless and they don't have much bills. They're saying everything's fine. I just have to pay for myself. But when you look at the people that are struggling, a lot of them have families and plenty of single people too. But for the most part, it's the people with dependents, people with a lot of overhead and high cost of living. But we'll see. We'll see how it plays out. But if you're doing good, that's good. Maybe that means you're in the top 30%. And great. I hope you make it up to the top 10%, maybe even the top 1%. Also, we have a lot of people caught up in this whole left-right thing. Oh, now we've got a right-winger. Everything's going to be great because the left-wingers are awful. Well, maybe they're both awful, but just in different ways. And are you picking the lesser of two evils, or are you actually picking something good, right? Again, the current administration looking at the lower interest rates. And it's not just the U.S., it's worldwide, folks. All this money being handed out, the cost of living inflation, worldwide. Look what they're doing over in Thailand. Basically, stimulus checks. Thailand hands out $890 million to elderly in a boost for the economy. Thailand transferred about $890 million to its senior citizens on Monday. For a country the size of Thailand, that's actually a good amount of money. It's not life-changing money. I mean, these people are not going to go out and buy homes with the amount of money they're getting, but it's going to help them some. But is it a solution? Obviously not. Were the stimulus checks in 2020 a solution long-term? No. It helped people in the short term. It helped people go out and buy things they couldn't have bought otherwise. And as a result, you saw the price of everything go up. The price of cars, the price of homes, even the price of rents, and all the other ways that people were let out of their debt and they didn't have to pay certain expenses. It all led to higher prices that are here to stay. We're not going to see lower cost of living. We're not going to see deflation until somebody throws a monkey wrench or something else in the gears of this money creation monster. And they're just going to keep throwing more money at it, more money at it, more money at it. De-dollarizing could change things, but the devaluation of the dollar continues, folks, when you look at the cost of living. Even though the dollar is strong compared to other currencies, when you look at what you buy for that same dollar, cost of meat, the cost of groceries, it's getting less and less, folks. So that's real devaluation of the dollar, if you ask me. And when you look at what it costs, just for the cost of living, but people with a family, like I mentioned earlier, there's a chart here I want to bring up here. And this is the cost to raise a family. Let me see if I can zoom in a little bit here. In the United States, state by state, over here in California, obviously the worst, where I'm at, $188,000. Alaska, that was a shocker to me, $137,000 in Alaska. With the weather and everything else in Alaska, the fact that a lot of the homes don't even have bathrooms and everything else up there, you would think that would be a very low cost state. But we see the lower cost states in the lighter colors here. Well, we've got West Virginia over here. A lot of the southern states, Alabama, $88,000 income, Mississippi, Arkansas, Kansas, pretty low cost. Iowa, Michigan, Minnesota. But yeah, California, the most expensive. New York looks like the second most expensive. Wait, let me get Hawaii in here. Oh, actually, I take that back. Hawaii, the most expensive. $259,000. Almost missed it down there. So Hawaii, the most expensive. California, the second most expensive. New York, third most expensive. And pretty interesting chart. I mean, how many people are actually making this much money in California? 188,000. All right, and keep in mind, this chart's at today's prices, but remember, a lot of people bought their home 10, 20, baby boomers 30, 40 years ago for some baby boomers. So they got in at such a low cost, they're not really having to make this much yearly to keep up with the cost of living. But if you were to buy a home here recently, these are the numbers that represent the current cost of living for someone buying at today's prices, basically. And that one was out of Visual Capitalist for those interested, right? A couple other things I want to get into. Allstate sued for tracking or selling the tracking data for their customers. So a lot of these insurance companies, what they try to do is sign you up for these tracking devices, and they say, oh, you get a discount if you're a safe driver. We're going to track your driving. And they want you to put an app on your phone, things like that. They used to put a device in your car. I don't think they do that anymore. Maybe some of them do. But the ones I've heard about lately, they put an app on your phone, and they want to track your speed, your braking distances, your acceleration, your turning corners, all your driving habits basically can be tracked with your cell phone. And what they're doing is they're selling the data, and that's how they're making money. So they're telling you you're getting a discount. They're probably making more money on the back end, though, by selling your data. But then also they can use that to raise your rates. A lot of people don't realize that. First you get a discount, you think it's all well and good. Then you end up getting a rate increase because they say they tracked you doing this, tracked you doing that, and you really don't have any way to prove you weren't, right? How many people are out recording their dashboard showing what their speed is? No, I've got video camera of my speed. I wasn't speeding. Like, how do you go against an insurance company on that? It says here, almost every app you download asks for location permission, meaning it wants to track where you are at every moment. However, many apps have nothing to do with location, still ask for it. Well, a recent lawsuit filed against Allstate because Allstate was selling their location data. So pretty interesting. And what are the companies that are collecting this data? What are they doing with it? Why do they want to know your location? Well, it gets pretty wild. It gets pretty interesting. I'll just read you out of this article here. The insurance provider allegedly collected trillions of miles worth of location data for more than 45 million Americans. The data was used to build the world's largest driver behavior database. So in other words, you could go to another insurance company and they have access to this data because it was sold to who knows how many companies, maybe even outside of the insurance industry. And they say, oh, look, you drove this far. We know that you're not really driving what you told us, because some people will say that they only drove 2,000 or 3,000 miles a year to get a lower rate. Sorry, we have the data that says you drove 15,000 miles, right? Who knows? We have data that says you had speeding incidents 200 times last year. Who knows? In other words, they're going to justify this as having higher rates. They're going to say, we have data on you. And then you're going to say, well, what do you mean? You don't have my data. How did you get that? And what they're going to say is, oh, you consented to it when you agreed to put this app on your phone. You consented to all this. And you can say, I didn't consent to that. So then how do you prove that you didn't consent to it? You have to go back through the fine print. But anyways, there's a lawsuit coming up. These people are saying that they were not told that their data was going to be used and sold on the market, basically. Quote, our investigation revealed that Allstate and Arity, which is the other company, paid mobile apps millions of dollars to install Allstate's tracking software. The personal data was sold to insurance companies without their knowledge. So they should have put that in the fine print, I guess, to get out of the lawsuit. Most people don't want to read the fine print. They'll just scroll up and sign it. I know I've done that a lot of times. And you may be not reading it and agreeing to something you don't even know about. You may be agreeing for them to sell your data. But they're still coming after them. They're saying they didn't get the heads up. They didn't get the notice. We'll see how that plays out. Bottom line, folks, be careful. Companies are always looking for ways to charge you more. And with this data collection, they can justify pretty much any rate increase, and it's very hard to disprove what they have in their data, right? You could think the data is wrong and incorrect, but how do you prove that? And then if all insurance companies have the data, you might not have any place to go to get a cheaper coverage. It's pretty interesting, folks. So they're always looking for ways to take more money from you and make more money for themselves. And cost of living, folks, what do you think about all this? The tariffs, the cost of everything right now, the cost of eggs. Will it come down? Will we see some relief? And how are you doing personally? Are you doing okay because you're investing? Are you barely scraping by? Are you in the top 30%? Maybe you're doing well. Had a pretty good year like I am. I'm not sure if I'm in the top 30%, but had a pretty good year last year. We'll see how this year turns out. I'll let you know about my trades. Looks like I'm going to be jumping back into the markets here pretty soon. I see some of the black swans out there are still there, and I'm still kind of cautious on a few things. We'll get more into that in my next video or maybe 2 videos from now. But anyways, we'll get out of this stuff for now. Everybody keep stacking. As always, big love. Bye for now. Peace.